Hey guys, I'm Duncan Wilson.
And I'm Sasha Syed, and you're listening to the Mortgage Sweet Spot Podcast, proudly presented to you by Mortgage Suite.
This podcast is your go-to source for expert insights, innovative strategies, and the latest mortgage trends to help you make the most informed decision regarding your mortgage financing. Whether you're a first-time home buyer, a seasoned real estate investor, or maybe somewhere in between, you come to the right spot.
So sit back, relax, and get ready to discover your mortgage sweet spot.
So today, honestly, we're going to try and keep these events current, our topics current. And today we're going to talk about the big, bad, probably the worst swear word this year in the mortgage industry, which is called renewal.
Yeah.
I mean, I called someone a renewal the other day and they got really pissed at me. So what is it like? Why is renewal so hard? How is it going to impact you as a borrower? Me and Sasha are going to go through that. And what we're going to do then is basically structure the best practices for renewing, what it looks like to renew, what you can do on renewal. And then by the end of this episode, we're kind of going to go through some current situations in the news that we get told every day from Canadian mortgage professionals or Canadian mortgage trends. They usually send out articles with current situations in the market. So, Sash, why don't you begin, man? Like, what is a mortgage renewal?
Sure. So a mortgage renewal basically means when you lock yourself into a mortgage, there's a term, and the most average term is 5 years. So when you get to that due date at that 5 year, your mortgage will renew. And what happens is the lender is going to send you about 30 days out a renewal offer. And just for numbers' sake, like say you went in at 3.5%. Your renewal might be like maybe, 4.5% or 5%. It is going to be based on what the current rates are. But, a lot of times other lenders are offering a lower rate. And then so I think it's important for borrowers to do a mortgage review about 1 year out from their maturity date.
Yeah, guys, 1 year, like that's a long time, Sash, right? Like it's almost like rigging the system, sending you out this renewal notice, 2 months before renewal. It just is stressful for the borrower because they're getting it going, oh my God, I only got 2 months. And I know 2 months may seem like a lot of time to a lot of people, but 2 months to me is not enough time. Like I want to go research the market. I want to see what's out there. So talk about this whole 1 year situation then.
Yeah. So, I mean, I would suggest 1 year because I've noticed in my own experience with my own clients that, things happen. People spend money in life and they use their credit cards. So, you have two options basically at renewal. You can either renew into what the lender offers you, or you can seek out a better rate, giving you a lower payment. And so if you want to get that lower rate, that lower payment, having a mortgage review will be able to address any credit situations that might arise or that might hold you back from getting that lower rate. And the reason why I say 1 year is because, listen, if you're facing a $10,000 credit card balance, you need time to pay it off. And that 1 year allots the right amount of time. And hey, if there's nothing in that time at that 1 year mark, then cool. We're going to check in 3 months and then 6 months and then 9 months. And we're going to make sure everything is good along the way. So
just to continue that. So, and then listen to Sasha, listen to those words, guys. It is no longer the case of I'm going to go get a mortgage and never think about it again. It's no time. It's more responsibility on the borrower. There's more obligation to the borrower. Sasha's laughing at my accent, so I apologize. It does have a tinge of Scottish in there, but people need to actually look at the fact is it is an obligation to have this mortgage now, and it is an obligation to renew. And you do need to sign back the actual renewal agreement. And if you don't sign back the renewal agreement, you'll be going into a 6-month open with that lender. Now, I've seen some lenders, for instance, on their 6-month open right now, you could get 8.5, 9% open mortgage. That's basically an open mortgage for you to commit to, I'm going to commit now to the lender for a 2-year term or a 3-year term. There's other drastic things, guys, that I've seen in the market that are happening in regards to renewals that I've never seen before. And I've been doing mortgages since I was a little old wee man at 17 years old. And honestly, the renewals are not the same as before. So if you have missed payments, if you've missed a payment with your current lender, you might want to come talk to a broker and discuss maybe a transfer or a refinance. And I'm going to go to Sasha on this, but before I do, if you've missed a payment or you're currently in arrears or you've ever been in arrears in the past, and arrears on a mortgage means you haven't paid for 3 months straight, the lender won't renew you. They'll actually probably send you a letter, and Sasha's seen one of these before where it says, hey, we're not renewing your mortgage. Please find a different mortgage elsewhere. So like, what do you suggest for borrowers that have maybe missed a payment? Like, I got the 1 year, you got to come in 1 year. What else are you thinking?
Well, I just want to touch on that as well, because it could also happen that the lender won't renew if you've missed property tax payments.
Oh yeah. That's good. That's good.
So maybe you make the mortgage payment, but you miss the mortgage or the property tax payment. The lender, and I've seen that as well, where they will come back and they'll call in the mortgage. So, I'm suggesting that if you've missed a payment already, like contact the lender first, go to service, like customer service, and talk to them. I find in my own personal experience with my clients where people who miss payments, they get embarrassed. And rightfully so. But what happens when you get embarrassed is you kind of hide away. And I want to just make this very clear to the listeners that the lenders want your success.
They do.
Like at the end of the day, they want to make their money on the money they're lending out. It's a business, but they also want your success. So if you've missed a payment, please contact customer service for your current lender, or contact one of us. We can get a client and broker consent form, and we can handle it for you. And then if you're maybe not miss a payment, but you're facing a missed payment coming up, please, again, contact us or contact the lender. They will work with you. And if you contact them, a lot of the times, they'll even if you can just make the interest payment, they might reduce it so you don't get that missed payment on your bureau.
Correct. And the thing is, what Sasha was mentioning there is called a broker consent form. It's probably to news to many borrowers out there, but most brokers that are customer service orientated, such as myself and Sasha here, we get our borrowers to sign a broker consent form. So that way we can call up on behalf of you as a borrower and alter the mortgage, explain the mortgage, the situation, fix any kind of arrears, fix payments, change the payment account. Like this goes back to the old time saying of just service to our borrowers. I find a lot of brokers don't get them signed these days. And obviously the bank, try calling your bank right now to make a mortgage payment change or things like that. It may not happen right away. On the broker side, when we get the consent form signed, you can make changes through us, and it's a customer service thing. If there's any brokers out there charging to make changes or anything like that, give me a shout. I'll do it for free. I believe in a thing called service. So other than that, like renewal. So we're going to go into this. What does it take to look to renewal? What's when you come and do, maybe Sasha, talking about the 1 year out, 1 year lookout, we're going to tell you, okay, there's a chance that your mortgage won't be renewed with this company because you've been in arrears or you've missed a payment. Or we'll tell you, hey, this is a great renewal rate, or let me know when it comes in and I'll tell you if that's a really good rate. Now, if it's not, and we can actually get you something better, maybe a better interest rate, what does that look like, Sash?
Yeah, for sure. So I would say, for most lenders, we can lock a rate in for up to 120 days. Some are only 90 days, but that gives us the time to lock a rate in. And while we wait for the renewal offer from your lender, usually lenders will do it at about 30 days. But if rates go up, and like Dunk, have we not seen rates going up weekly lately?
Never in my life. That's joking. That's a joke. That was a joke.
But we can lock that rate in. And if the rate goes up, you're locked in, you're protected. If it goes down, we just resubmit for a lower rate. The other thing, what we need to do to make sure that you'll qualify for that rate, it's super easy, guys. It's income verification and liabilities. Just got to pull a bureau and make sure everything is good. But that's what the mortgage review will do. That will tell us if you will qualify and if there are anything that we need to address before you get there. And that's, again, I just want to reiterate, the 1 year gives us that time to cover that. But it's super easy to do a switch transfer if you qualify, and it's just income verification and pulling a bureau. It's so easy, maybe 30 minutes of your time.
Yeah. And just to get into that, when Sasha says switch transfer, okay, a switch transfer is not a refinance. A switch transfer happens on renewal where you don't take any extra money out. Now, when you're moving lenders from A lender to B lender, or sorry, A to another lender, you're basically going to incur these costs, a legal cost. But most times the other lender that wants your business with the lower rate will end up paying your legal costs for that and any kind of associated costs like appraisals. Many times as well, guys, you got to remember this, and it's a really crazy hidden win-win situation. But if you bought your house with 5, 10, or 15% down, and now you're coming due on the 5th year, to get the best rate, you either have a renewal or you do a transfer switch, and we can keep that insurance policy attached to your current mortgage, meaning that you would get an insured rate when you transfer it over. And that could mean the difference of one whole percentage on your mortgage, which is a lot these days, guys, because house prices have gone through the roof and not many people can afford them. I'm doing more mortgages these days with, sister, brother, mom, and dad. They're all on title to help out little brother buy a house. So with the house prices so high, let's take the average right now in Windsor at $547,000. 1%. I'm not going to do the math. It should be able to do it.
$5,470.
There's a savings right there. It's a huge amount of savings. So you don't want to detach your insurance policy that you originally got from CMHC or Sagen or Canada Guarantee. And we'll go into more details on insurers at a different episode and all that kind of stuff. This is mainly to do with what the heck do I do at renewal? And everybody's coming due for renewal this year. So everybody's freaking out and they're not knowing what the hell's going on. They don't know if they're getting the best rate. Honestly, come to Mortgage Suite, talk to Sasha, talk to Duncan. We could tell you, and we're not trying to get your business. We're trying to get your loyalty in regards to the next time you come due. So if there is a better rate that you're getting, we're going to tell you that's the best rate in the market. You may as well take it. We're not here to do mortgages that end up costing you guys money.
Yeah, and just to touch on that, I mean, honesty is the best policy in this business, and that's what we strive for here. So, I mean, if you want to stay with your bank, and really the best rate out there is maybe 5 basis points less or 10 basis points, and you just want to stay with your bank, that it makes sense at that point. But in the end, if we can save you 0.5% or 1% or 0.75%, at least allow us the opportunity to make sure that we can get that rate for you, and let us guide you along the way. Let us earn your trust.
Yeah, I agree with there. And a lot of times we actually look at the savings and equate it to Tim Hortons coffees.
Yes.
So I would say when you come in and talk to me, I'm like, that's at least 13 Tim Hortons coffees that month. So we'll do the math for you and equate it to Tim Hortons coffees or McDonald's coffees, depending on who's having the special and which brand you like. But honestly, it does result in savings looking at your renewal. Instead of just signing on the dotted line with the bank or signing with your previous lender, it does save you money by having a quick look. And our job is not to bring you in the office or waste your time. Our job is just to get a little email with an attachment saying, hey, this is my renewal rate. Can you guys beat it? And then we'll go into conversation at that time.
Yeah. So I want to ask you something about what if a borrower is maybe facing a reduction in income, or maybe one of the spouses has lost their job? Will they be able to renew with the lender? Is that, maybe some people are facing that issue and they're coming up for renewal and they don't know what to expect.
So I would say the main flag for any lender not renewing is those arrears and missing payments. I would say right now a change in capacity of your work, meaning you're no longer working. The lender's going to assume you're going to be looking for another job. They will not pull that mortgage just because you're not working at the time. If you've made your payments on time, each month, or each biweekly payment, they have no right to basically come in and say, hey, we're not renewing you because we found out that you don't have a job.
Yeah.
Like that, I've never seen that in my career. I mean, don't say it won't happen, but I just can't see that happening because that would just lead to anarchy in regards to renewing. I understand completely on a lender, for instance, not renewing you because you've missed payments. It costs them more money in the long run to keep a client on the books that misses payments as opposed to someone that never misses them.
Yeah. So just in general, if somebody who's maybe lost a job or somebody in the household has lost a job, maybe, you can just renew with that lender.
Correct.
Without being, having everything reviewed again. So
Yep.
maybe moving lenders for a lower rate's not the right situation for you at that time, but renewing will, you won't lose your house if something has happened in that term. Right.
Correct.
Unless you miss payments or property tax.
And talk to us regardless, because I'll say this, even if you talk to us, you're our borrower for life. All right. We don't need your mortgage for you to be one of our clients. We just need your loyalty and you to come in and talk to us about it. We need your patronage. So it may not be your mortgage, but we've advised you saying, hey, just renew with this current lender. And then, it works out. Send us your referral. Send us in your friends, your family. We can help them out and we can figure out some stuff for them, and honestly go the extra mile when it comes to getting a mortgage. along with all this beautiful news Maddie just brought up, she's over here just recording, getting things done. How you doing, Maddie? So she's saying, hey, we got to bring up some rate situations. So, June 5th.
June 5th is the next announcement.
It's like the Ides of June.
Now, can I say something that I've noticed in the last year?
Oh, please do.
Every rate announcement that they've held, like the last 5 of them,
Okay.
I've noticed that lenders either go down a little bit or they don't really move their fixed rates. This last announcement, I've noticed them go up a little bit. Now, I also want to pair that with the new carbon tax and everything being more expensive. What is your prediction?
Well, I already placed my bets. I'm going hardcore on a drop.
Yeah.
I think there's going to be a drop. The economy's at its extent of exhaustion. I mean, with a mortgage rate drop, maybe I can afford that extra steak at the food market. And then, put at least more than half a tank in my gas tank. But no, this, all kidding aside, guys, I honestly think it will drop. That's my opinion. I know there's a lot of floating out there in regards to bond rates. We'll go into, it's a completely different story when I talk about mortgage bond rate compared to the prime rate. They are correlated, but it's a whole other topic. My opinion, and just based on the market, based on where it's going, I do believe there's going to be a quarter drop in regards to it, just to stem the economy and bring house prices, no offense, up. They'll probably either stay steady. As of right now, there's more houses being placed on the market right now, and there is a decrease. And I think that's what, in my opinion, what the government thought would happen, which has happened already. And even with this decrease, nobody can afford them still. So borrowing, I don't think borrowing at a quarter less is going to increase your beautiful other bad word, which is inflation.
Yeah. Okay. And I mean, since we're talking about house prices already and mortgage rates, what do you see the relationship between house prices and mortgage rates? Do you think one affects the other? I always hear date the rate, but marry the home and that kind of stuff.
Yeah.
Right?
Honestly, I would say 5 years ago, before COVID, before all of that, no one thought about how rate affected the housing market. We're now in this shortage. So everybody's looking for a house. Everybody wants to deserve a house. I mean, the Canadian government, since I was probably 5 and looked at ads, it said, hey, you should become a homeowner.
Yeah.
So everybody's brought up with this whole mentality that, hey, they should mortgage and go buy their own home. There's other economies in the world right now that have all rental, and it's owned by the government, and maybe they're a stable economy. We can go into that later, but there's other places where renting is not looked at in such a bad, light, I guess you could call it. But in Canada, we're like, own your house. You got to own. So this shortage is basically what's kind of put pressure on this rate situation. So the government, GDP, for instance, housing real estate in Canada, I believe topped at 12% of GDP. I'm not going to, guys, this is not a specific lesson, but just general. But it topped GDP. And that's interesting because forever and a day, it used to be 5% or lower. So with GDP being affected by so much real estate, when they increase that mortgage rate, it's dropping the real estate costs. Yes, the interest rate dropping a quarter will probably bring houses back to a plateau higher than what they are right now. So the average price, again, in Windsor, I think came out $547,000. You're going to notice a 25 basis point drop, maybe bring the houses back to $600,000.
Yeah. And on that, I mean, some people might not be getting it. There's a lot of jargon going on here, but essentially if the rate goes down, then people can afford to borrow money.
Yep.
So then that brings more, potential buyers to the market. With there being a shortage of inventory, now you got this flood of people who can afford to borrow money trying to get one house. So you're getting all these bids on houses. That's what's driving the price up. Yeah. So relationship between rates and house prices, it's, I don't know, the government says they're figuring it out, but really I think at the end of the day, if people can borrow money, that's just throwing more people in the pool of wanting to buy in a pool that doesn't have a lot of inventory available.
Well, let's talk about that inventory. So I believe every bit of that inventory is this beautiful coined word called luxury homes.
Don't get me started, man.
Why don't we make a non-luxury? I know I'm going to go build some houses, call them non-luxury. And it's just going to be simple, baseboards, boom, done and dusted, just a nice, simple $200,000 house, still make a profit. But these builders, they're all building these luxury homes. And some of them, they're monstrosities, and it's great that someone lives in them. But I drive by them sometimes going, how is this family making it? Like, what's going on with this house? It's huge.
Yeah.
And it's on a tiny lot. It's just crazy to me. So the whole word luxury home, it started going crazy, I think, during COVID. And even COVID, the effect of the market on COVID. Oh my God, guys, the economy was slowing down. The government turns around, drops interest rates like crazy, keeping them the lowest ever. So what do you think is going to happen? People are bored at home. They're on the, they're what are they watching?
Realtor.ca.
Yeah, Realtor.ca or Buying Up Miami or Realtor LA.
Lux Toronto or
Lux
whatever.
Toronto. And they're like, I should buy and sell homes. So a lot of them, and I know guys that went in and bought a bunch of these homes. And right at the drop when the interest rate started going up, they could not offload those homes for a profit. They basically lost all their profit. Now, don't get me wrong, they made a good profit during the COVID situation, but COVID, I don't understand why they played around with the interest rates at that time, causing all this. And now we're reaping the benefits. Before COVID, the 10-year fixed rate was at 2.9%. And I got a good 40 clients into that mortgage, 10 years. And that's a product where you're like, hey, I'll see you in 10 years. Your kids will be grown up. And it felt good. And I still have clients calling me today going, thank God you gave me that 10 year at 2.9%. I remember some clients when I was given 10 years at 2.9. Oh no, I don't want 2.9. I want the 1.1. And those are all the ones coming due today, guys. So I hope the ones that didn't listen to me about my 10-year fixed rate, you know what? You're coming due. So come on and talk to me and I can figure it out. All right. So we're going to wrap it up quickly. Sasha, you got anything else to add, bud?
No, I mean, I think that's good. So if anybody has questions about what we talked about, they can give us a call here at Mortgage Suite or go to our website. We got lots and lots and lots of resources and information on our super awesome Wiki Mortgage page. So contact us.
Yeah, and that's also in our exit. So Sasha, repeating it. I love it.
Yeah.
So let's just go quickly. Headline news, okay? Headline news. Let's go. Why you shouldn't fear credit score drop when applying for a mortgage. We're probably going to talk about that next week, okay? As of right now, Vancouver falls short on the housing target. Kingston, Canada's hottest housing market. Well, it's so far away and nobody was buying there before. No wonder it's hot because it was freezing cold before.
Yeah.
Could a 10-year mortgage term help with payment shock? Well, it did back when I was doing them. That's what I was trying to get at. Peterborough affording housing needs $122 million in maintenance over next 20 years. I honestly would love to dig into that because I know there's a lot of older homes in Peterborough. Calgary Council approves citywide rezoning with amendments. That's happening a lot with rezoning because they want to actually take commercial properties and make them into condos and rental units. Calgary housing market seeing bottleneck as applications surge and turnover is slow. Hamilton rolls out housing programs to capitalize on a $70 million and federal cash budget. City Council approves citywide rezoning in Calgary. And basically, that's it, guys. It's a whole lot of crazy news out there. And that's why we've come here, sit down during our busy, bustling days and actually tell you all about it and at least pick one relevant topic that we could talk about to explain it to you, our beautiful viewers and listeners.
Excellent.
Ladies and gentlemen borrowers, thanks for tuning in to the Mortgage Sweet Spot. If you have any suggestions for upcoming episodes or questions for our hosts, me and Sasha, throw them in the comments below.
And if you enjoyed the podcast, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, or you can check us out on YouTube. Once again, thank you for tuning in, and we'll see you on the next one.